Hello traders, today is the 13th of August 2011 and happy Saturday to you all. We are looking at the S&P 500. The S&P 500 is the market, okay? And for those of you who are new to us, we are the TSTWSYS08 traders, and our website is www.stochastic-markd.com. For every trade, we will use the 5% money management rules and apply stop loss in all trade. This video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell any financial instrument. It's primarily for the TSTWSYS08 traders. Okay? Now, we are looking at the S&P 500. This is the daily chart of the S&P 500. We can see that since May 2011, the price was going down. Okay, you see, it went down, went up, went down, went up, went down, went up, but the trend is down, only to see it crash down, kaput here. Okay, we were telling traders, give priority to selling, give priority to selling, give priority to selling, give priority to selling, boom, down. Okay, this was happened. Okay, when the price is in overbought zone, this was happened. Okay, do not give priority to buying in overbought zone. Simple. Okay, even though the price was going up few days, you can see there were days where the price was going up, but the trend was just down. Okay, even here it went up all this way. This is just a pure market manipulation, what I call a market distortion. All this day here is what I call market manipulation, market distortion. You see, after the distortion, what the price did, kaput, down. What's happened? Okay, the market will always rectify itself. Why suddenly the price did stop here? I want you to pay attention to this level here, this level of 1120. Can somebody tell me why the price did stop in this zone of 1120? Okay, if you do not know, it's because you did not check the critical price levels. Critical price level. A stochastic MACD trading tool, stochastic-markd.com. This is our trading tool, our private trading tool that we reveal to the public. Okay, CPL1, CPL2, CPL3, CPL4, CPL5, CPL6. The CPL6 is the smart media line. We have in total 6 critical price level. Okay, and the 6th critical price level, the number 6, is the smart media line. You see right here, why the price is stop here? The market is acknowledging the smart media line. The smart media line for the S&P 500 is at 1120. Can you believe that? Can you see? It did respect it. It did acknowledge it. It did below it, but went above it. Went below it, went back above it. The price, after going down since May, okay, the price did stop on the smart media line. Whichever financial instrument you are trading, whether you are trading currency, you are trading stocks, you are trading commodity, it does not matter. The smart media line and all the critical price level, okay, critical price level of stochastic-markd.com, okay, these are very important price level. Okay, do not disregard them, very important. Okay, so we go now to the yearly chart to start again talking about our critical price level. This is how you will trade if you want to improve your trading. Okay, so I'm going to give you quickly the critical price level for S&P 500. The critical price level for the S&P 500, okay, which is the CPL1, is at 1117. Okay, CPL2 is at 1262. CPL3 is at 1262. Okay, CPL4 is at 1006. Okay, so CPL1 1117, CPL2 1261, CPL3 1262, CPL4 is at 1006. CPL5 is at 1260. The smart media line, which is the CPL6, okay, is at 1120. That's where the price did stop after all the blah 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 to the downside. You see, it was going down, going down, going down, and it did acknowledge the smart media line right here. Another point I want you to pay attention to quickly on the yearly chart, the media line of the year 2008. Whenever you see a bit of exaggeration or oversized candle bigger than any other candle. This is not a normal size. You see, this is a bearish here. We want to know the median line of oversized candles, and the median line for 2008. Each candle here represents a yearly candle. It's 2007, 2008, 2009, 2010. Here 2011, no year completed. We want to know the candle that is too big, okay, a bit abnormal, okay. We want to know that median line is at 1105, 1105, right below the small median line, okay. You see these two horizontal lines going back again to the daily chart. You see the price went down, it did below the small median line only to touch the median line of 2008, that abnormal yearly candle. You see right here, this one here. If you knew that level, okay, you will know exactly why the price is behaving in a certain way in that particular zone. We are now on the 30-minute chart for the S&P 500. Okay, by the way, the title of this video is Trading the S&P 500 Like a Professional Trader, okay, which means you are using the stable data and the critical price level, paying attention to the market first, the sector, the individual financial instrument, using the stable data and also the critical price level, especially, okay, the small median line. The small median line is the creation of the stochasticmarket.com, the most important critical price level. Forget about any other critical price level that you have known so far. We are talking here about another critical price level, which is the creation of the stochasticmarket.com. Okay, very important. Now, as you can see on this 30-minute chart, if you were here that day, the price going down, approaching the small median line of the market, you will be very careful. But if you didn't know, you will be using your stochastic on the 50-minute chart, on your 5-minute chart, doing your own thing. Price went down, you will be watching this zone carefully because this is a support zone, important level. And also the median line below here, price D below it, return above it, come back and display a double bottom, a higher low here. It's a higher low. Here again, look at that. This was easy trade. You see how the price ran fast here? Boom, 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 boom. Okay, this is S&P 500. Price crashed back down. Where it stopped on the small median line again. Very important. Watch it, watch it, watch it. Okay, as we were telling traders before, we believe that the market should go down up to the end of October in normal condition without any market manipulation. Because recently in France, in Spain, okay, in Italy, and also in France, in Belgium, they have banned shorting for 15 days. This is another market manipulation, pure and simple. Okay, so price come back again, retest. Okay, the small median line, D below it, return above it. This was again here, you see, here again, small median line. See how the price was starting on 30-minute chart, you see. So very important level. If you are trading any financial instrument, you must calculate your smart median line and your critical price level and know them by heart, write them down, okay, and know what you are doing. Okay, if you drink a Coke, if you are trading, okay, write it on your Coke can, okay, if you want to. Now that's for laughing a bit. Okay, we're going to go quickly on the monthly chart for the S&P 500. What do we have here? I will remove some of my previous drawing on this chart, and then we can start afresh again. Okay, we have, I was telling you, we have a bearish Gartley pattern right here, bearish Gartley pattern. Okay, if you forget the criteria for the bearish Gartley pattern, first retracement in the zone of 61.8, the downtrend first, retracement to 61.8. This is where I place my red horizontal line. Okay, price went down and then retraced to 61.8. Second criteria for the bearish Gartley pattern, okay, retracement in relation to A to B from here to this level here. We want to have either 38.2 or 88% Fibonacci retracement level. In this case, we have 38.2. Second criteria of the bearish Gartley pattern, price went up to this level here. We want it to stop in the zone of 78. Okay, 78.2% Fibonacci, okay, retracement level in relation to 0 to A. Okay, this is just a pure theory regarding the Gartley pattern. Our attention is on the price. The 78.6% Fibonacci retracement level is at 11380. The price is still 4 pips away from the 78.2. So we have a pure bearish Gartley pattern for how many months? May, okay, June, July, August. We have a bearish move to the downside. Attention now on the price. We are trading the price. We are not trading the stochastic. We are not trading the RSI. We are not trading the whatever any other indicator. We do use indicator, but our attention must be on the price channel. Okay, either the channel is rising, or the channel is declining, or the channel is horizontal. Three things. If you remember that, you are in the game. Okay, here we have a rising channel. Now we pop out of it. What do we do when we pop out of it? We will project the channel. Okay, this is just, okay, action and reaction. Okay, in equal measure. Came out here, try to test the low, the lower part of this second channel here. Try to find a support in the zone of the small median line. Okay, the small median line, as I told you, you should know it by heart, is at 1120. Okay, somewhere here. That's the small median line, and right below that we have the median line of 2008. Okay, which is 2008, which is at 1105. These are the levels. You see how the price came to touch that level here. You see what we are talking about? Since last year, we were telling traders, be very cautious, because the market was going up on one leg, so to speak. We want to see a double bottom on the weekly chart. Okay, on the weekly chart, very important. So if the price is about to go up, if the fundamentals are sound, if everything is, if the bearish, the bearish factors has been erased, so to speak, okay, and we are getting back to a normal condition, the price must go down first. Okay, this creates a bit of confusion, because if the price is about to go up, it must go down first. Okay, remember that. If the market is about to go up for a long time, okay, it must go down first. You see here, in 2008, before we have this bullish year, 2009, 2010, the price went down first. Okay, now, if the price is about to go down, it must go up first. Before, in 2008, you see, we were expecting, we knew that the price should go down, but the smart money want to sell at the best place, so the price must continue to go up. Ordinary traders will enter the trade at the wrong place, and they are already taken out of the trade before the bearish party has begun. Okay, but if you are paying attention to the price, draw your channel, watch the price, you won't get into that trouble. Okay, because most traders can trade perfectly, but the timing and the entry point, the place and the time, the place and the time, this is the key for successful, consistent winning trade. Okay, so here the price was going up, we say to traders, be careful, it's going to go down, but the price was going up, people getting on board, getting excited, but finally it returned down. Again, this year we were telling people, okay, since May, give priority to selling. Very important, give priority to selling. Yes, there were days when the market was going up, even in many days sometimes price was going up, but you see it crashed down. Okay, there was some manipulation, as always. The price did not hide it. This is again another, here you see, this is another blah 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 blah. Okay, only to be crashed down. Okay, this is what we are talking about trading this the S&P 500 like a professional trader. Your eyes constantly on the price itself, the number one indicator. What is the perfect scenario? What will be the perfect scenario is for the S&P 500 to retrace at least to this level here. 944 will be a better place to come and touch it. Okay, it came very close. In my view, okay, the market should allow the S&P 500 to come a bit down, okay, in the zone of 944 at least. Better to retrace completely to the devil number here, which is the smart low of the range of the 5-year candle. The smart low for the S&P 500 is at a 666. That's the devil number, 666, and the smart high for the S&P 500 is at 1575. Okay, this is about trading the S&P 500 like a professional traders, paying attention to the price itself, the number one indicator. As we said to traders before, on a daily chart, draw your channels. Okay, this was a kind of horizontal channel here, blah 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 blah. Okay, if you did, I'm going to draw the line quickly here because I don't want the video to be too long. Okay, so very fast we will remove all our previous drawing. You can see that some traders did cream the S&P 500 here. Okay, you see we were in a kind of horizontal channel, blah 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 blah. When we came out of this channel, what do? You project the channel to the downside somewhere in this zone. The price did acknowledge that level. You see this doji here. The price went down only to retrace quickly up, projection of the channel. Price pop below it, they project it again to the downside. Okay, so the same size of the channel here. Okay, we bring it down here, it came out, we bring it down here. Okay, now this is the smart median line at 1120, and right below it the median line of 2008, which is at 1105. Okay, so I hope you enjoyed this video regarding trading the S&P 500 like professional trader, that you will put into practice in order to cream the market consistently. Thank you for watching, and we will speak to you very soon. We are the TSTW SYS 08 traders.